What is up, trading table? And welcome back to another video. I had to fix my sound real quick. I did not take a trade today. Did not trade today. But I did think this could be a good opportunity to make a video on how to correctly use inverse fair value gaps, because when I first started, I kind of like was struggling a little bit with them. So inverse fair value gaps might seem easy, right? Like you might be like, okay, right here is an inverse fair value gap. And while yes, this is absolutely an inverse fair value gap, as you could see, this candle right here displaces and closes above, and then price completely rejects it. So what I'm just going to be going over today is how to get the higher probability inverse fair value gaps, especially on a day like today where I was just going over price action just to see if my strategy had any interest today. And it did, but it was tricky. So yeah, I'm going to be going over the trade I would have took today if I traded. I didn't trade today just because price action recently has been completely terrible. As you can see, like New York opens and then we drop. Dude, how many points is this? Like 228. Although this is pretty good shorts right here. I don't think I would have had an entry here. I think I looked at it yesterday. I don't think I would have, but you know, this is probably like another example too this day of how to properly trade a reversal after like a 200-point move like this. So yeah, that's kind of what I'm gonna be going over today. How to correctly trade an inverse fair value gap reversal, because I don't know, that's something I struggle with. So I figured, you know what, I was literally just looking at the charts. I'm like, you know what, I'll make a video today. So obviously, going into today, I'm just gonna pretend like today was like, you know, I'm just gonna go into replay mode and go to 9:30. All right. So today, right, we had a lot of bearish displacement. Why do we have a lot of bearish displacement? Because yesterday we dumped 200 points, right? So we've got this fair value gap here, right, that we already rejected off of during London session. We tapped into multiple times. It's a very obvious rejection, right? And then we also have this 15-minute fair value gap that we are clearly rejecting. And then on top of that, I'll pull up ES's chart as well just to double check. I'm not sure if there was a SMT this day, but you know, we might as well check. I have to like link the charts like this. Give it a second. Okay. Yeah, and there's also a SMT with ES. As you can see, ES, we've took London high. We'll just base it off this candle right here. There's probably definitely a higher time frame SMT, but boom, right? And then on NQ, we're all the way down here on the 15-minute. So SMT as well. Super, super easy bearish confluence, right? ES took this high, NQ did not. Okay. Now that we've established that we're bearish, obviously, let's go to the 1 minute, right? So let's just wait for price to open, right? Price opens, boom, we sweep down, immediately take out literally every single low that London made or engineered. Next target would be Asia. What do we do next? I don't know if that's candle. It's yeah. Next candle, we take out Asia. So boom. Now what do we have below that? We have previous day low. Here's the thing though. Here's the thing. How many points is that? 80. That's doable. Okay. I was gonna go on a little thing like there's no way we're gonna touch that. Very possible we could have. Now that we've taken out these two sell side targets, we're good to, you know, look for longs. That's kind of the first thing you want to do. So now that we have a liquidity sweep, we have liquidity behind our trade, we have highs, a lot of highs resting above. Now we can start looking for longs, right? And I think on top of this, just because there's so much this bearish displacement, I would want a nice SMT with this too, like a nice high time frame, anything above a 5-minute SMT. So let's just go ahead and let price play it a little bit. I'm going to close this ES chart until we're ready to take a trade. So right here, boom, first example of why you should not take this inverse value gap. And they're like, okay, boom. Well, first of all, this one's easy. You have this already resting above. What are you going to take this fair value gap for? You always want to take, you know, you always want to be able to inverse this so then you could target the highs. Why the fuck does this keep? So if you're going to inverse this one down here, then you have this bearish PD array above. What are you going to target? You're going to target shit. You're going to bounce off this shit and then reject, which is exactly what happens, I think. Not I think, I'm pretty sure. I know. Matter of fact, fuck it, I know. On top of that, here's what I'm talking about with the inverse value gaps. Always got to check if there's a higher time frame for value gap. That's why I have the 1, 2, 3, 4 up to 5 minute. I don't go above the 5 minute. I know there's some people that do. I don't, because fuck that. Like, there's if anything's over like a 5 minute, bro, I already am reluctant to take like 5 minute inverse or value gaps just because commonly I take most of my trades before 10 a.m. where market's super volatile, or 10:10. I wait for like the 9:50 macro, or I like to. So I'm already trading super high volatility, bro. If you wait for a 5 minute inversion at NY open, 9 times out of 10, you're not gonna get an entry because the 5 minute fair value gap is just, or I mean, the 5 minute inverse fair value gap, the candle on the 5 minute is just gonna go and take out your targets anyway before you can even enter, before there's a candle closure. So yeah, 3 minute, yes there is. 4 minute, 5 minute, there's a 5 minute, bro. There's a 5 minute, okay. So we need to inverse this. What happens? We obviously don't inverse this, bro. So what is this not? Oh, it's still connected to the ES chart, even though it's closed. Splendid. Let's just go ahead and take care of that real quick. Okay. So yeah, we obviously reject. So that's why you should definitely not have taken that, right? That's just reason number one. Always want to wait for that higher time frame. And it does get tricky sometimes. It does get tricky because it'll look so good on the 1 minute. Sometimes I used to just forget to even check that shit because it would be like a perfect 1 minute setup, and then I wouldn't like think to check the 2, 3, 4 minute, and there'd be like a 3 minute gap that we have to inverse in like the same area. It's the same. It's like I've seen it before, completely same area, but there's just a higher time frame one, like a 3 minute in this exact same spot that we failed to close. Because obviously, inverse fair value gap, you need a closure above the fair value gap for it to be inversed. So, you know, there's a 3 minute. It obviously doesn't close on the 3 minute. Like, it wouldn't have here. Like, look at the 2 minute. Was it the 2 minute? Might have been the 3 minute. What the hell was I just on? Oh, it was a 5, bro. It was a 5. Yeah, so this 5, obviously, even if you weren't using this, because I'm sure price like did its thing before. Let's say you were using the 3 minute or even the 2 minute, bro. Look how big this is on the 2 minute. You do not want to be taking this. We actually tapped into the CE perfectly and then rejected. So yeah, always check if there's any of these time frames. 1, 2, 3, 4, 5 minute for value gap. Okay. Then we keep going, right? We take out the internal liquidity, which is like pretty much the only thing I'm watching for now after like we failed to inverse and distribute. We make another fair value gap, right? Oh, this one looks promising. Wow, this one looks really promising. I don't think this is the right one. I could be wrong because I don't really remember price action. Right, let's just say, you know, we want to take the first one in the leg, right? That manipulates down to sweep this internal liquidity. So, oh, it might look like, okay, we have a good trade here. We'll target whatever the fuck, this fucking high, and we'll just stop right there. No. I'm pretty sure if we go to the 2 minute, yep, the 2 minute. Look at the 2 minute. Look at the 3 minute. Is there one on There's one on the 3 minute, bro. I'll be damned. Is there one on the 4 minute? No. 3 minute. What happens? Do we inverse? Fuck no. We do not inverse. We completely reject that shit. Okay, so now what am I doing? I'm back to the 1 minute. Back to looking at price. I want to make a new low. I want to take out these lows on NQ. Let's see. Whoa, boom. We take out those lows. Okay, this is looking good. For the sake of, you know, whatever, I don't think, if I had enough conviction behind this trade, I don't think I'd pay attention to this. Ideally, also, they're not ideally. I actually don't like when there's higher time frame for value gaps, but we have to inverse. But in this scenario, I guess ideally there would be. But yeah, if you have like, I don't know, that's kind of like if you're more like advanced though. If you have enough conviction, you can kind of ignore like this shit. That does kind of decrease your win rate, but I don't know, dude. You unlock like a sixth sense sometimes with the market. You just know this is where we're gonna reverse. I don't know. I'm just bullshitting. All right. Now I can pull up ES because I'm pretty sure we have pretty nice SMT here. Yes, we do. So as you can see here, if I think that's a 5-minute as well. Could be wrong. No, it's not. Oh, wait. No, it's not. What was I looking at again? Oh, yeah. Oh, what the hell am I talking about? Look at this, bro. Look at this SMT with Asia. Asia lows, boom. What happened on NQ? We took Asia lows. We're forming the biggest SMT of all fucking time. And on top of that, there's like a smaller time frame one. As you can see there on the 1 minute. If we go back to the 1 minute, it's not like a, I guess it's not a high time frame one, but it's kind of like a, you know, wait. Okay, I'm actually losing my mind. No, there is no. Okay, so that was the SMT I was talking about. The SMT with Asia. So we have an SMT with Asia lows, right? On the 5 minute. I'm sure, what time is it here? 10. Boom. So we also have one probably on like the 4 hour. That might be a bit ambitious, but let's see. I don't know. I'm low-key going through this trade as I go as well. Let's just see real quick. No. Where would Asia be? Asia right here? I should have probably marked out Asia lows. That would have been really smart. Dude, fuck it. Let's just go to the 1 hour because I know there's going to be one on the 1 hour. All right. You know, bro, let me... My bad. Let me mark out Asia lows. Let me stop being retarded. All right. So we have Asia lows here. That's Asia lows, right? On NQ. And my indicator just disappeared to show me my sessions just to make my life easier. I don't know why more people don't use these session indicators, by the way. Like, it just makes life so much easier to, like, spot the session and shit. All right. Now let's go to the 1 hour. Turn this bullshit off. All right, zoom in. Okay. So here's Asia lows on NQ. Here's Asia lows on ES. So you can clearly see that we've took it out on the 1 hour. And since that 10 a.m. candle opened, obviously we now have a 1 hour SMT. This leads me to believe there actually is also a 4 hour SMT, and I was just being stupid and didn't see it. Yeah, okay. There is. It's less notable, obviously, or less easy to see just because, like, I used a horizontal ray to mark out Asia lows because I'm just dumb as shit. And then also, whatever. We've established there's a higher time frame SMT, bro. Okay. This is so much easier to look at, like, in real time because the candle's actually in front of you and you don't have to, like, oh, which one is it? You know what I mean? But okay, we've established, I don't know. I just probably spent like 5 minutes on that bit that there's an SMT. There's an SMT, bro. Okay. A really nice one as well. And it's with whatever low we're about to make. Because now I'm confident that with all of this engineered liquidity, we now have a new draw. We're no longer going to dump price forever, right? And on top of that, we do have a 15-minute fair value gap here. What else? I'm sure that there was another PDRA. There probably is. I really don't give a shit. All right, that's good enough for me. I just, at this point, I just know. I know for a fact that if we inverse here, we've got this internal liquidity to draw this, and then we also have London highs that we have not tapped yet. So our, you know, external and internal draws are pretty nice. Let's actually, like, play this out because replay mode is low-key stupid. So we're going to wait for the inverse on the 1 minute, which I think we're going to get here. Nope, nope, nope. For God's sake, dude. Okay, then it wasn't this fair value gap. See? There you go, bro. All right. It was this one probably. So yeah, there we go. Now we took out all these lows as well. We didn't get the inverse fair value gap here. See? Boom. We get the inverse fair value gap. Perfect. Let's go back here. This was the SMT I was looking at earlier. That's why. I was in the wrong spot. Okay. That's how I was just blabbering about SMT, bro, and with Asia. So yeah, there was one with Asia. There was also an SMT. I'm sure this is like a 5 minute or some shit. But yeah, as you can see, there's, you know, SMT there as well. Probably like a 5 minute. I don't feel like checking that anymore. I did like a whole like thing. Now let's see though. Okay, another thing to just save you time. If there's no 2 minute, like if you go from 1 minute, there's a fair value gap, and then you go to 2 minute, and there also is no fair value gap, okay, chances are, or not chances are, there is no 3 minute, 4 minute, 5 minute fair value gap. 3 minute, no. 4 minute, no. Right? 5 minute, no. And if there is, it's not in the correct spot. Right? You're probably seeing something like way less. That's when it gets to the 5 minute, it gets a little bit confusing. So just keep that in mind. Yeah, so we inverse on the 1 minute, and then we get a beautiful trade, right? Stop had to be a bit bigger here, just because you want it to be at this SMT low, right? You want it to be at the SMT low because this is a protected low. It's less likely that price will go down here. Price can retrace to like right here even, okay? And then still, go back up. I think price actually does retrace into the fair value gap, like pretty low. So if your stop was like here, you might actually have gotten stopped out, or maybe not there, but if you went break even. Okay, boom. So we enter. And then for targets here, you could target London high. I probably wouldn't be that ballsy because of all this bearish displacement. Just because the way I trade, like you definitely could. But I would probably be targeting something like this, right? Did I mark that right? Yeah, I did. Was that the right fair value gap? Yeah, it was. Okay. Yeah, I'd probably be like either A, break even here. 36 points is more than enough for me. So I would have 100% had my take profit set here at this 15-minute fair value gap, at this like untapped 15-minute fair value gap. Or if you wanted to, I don't know, be a bit more ballsy, you could have either went to London high, obviously, or even this 5-minute. That's just super risky, and I'm honestly willing to see if this plays out. But yeah, 30 to 40 points is more than enough for me. More than enough for the day. I'm like, I don't really chase home runs, bro. Like you don't need home runs. Just like a nice consistent profits is a lot better than trying to chase, what London high would be, which is probably what, like fucking 120, 110 points, right? You don't need to do all that. You can if you want, but not me. So here's like the ballsiest I'd get with this target. I would go there. That's as far as I'd go. Let's see how this plays out. So we did come back and retrace, and then I think come back and retrace again. Yeah. See, so if you had like your stop loss, like another thing too, which is like pretty useful to know. If you had your stop loss at the bottom of this fair value gap, you would have gotten stopped out, and then price would have ran straight to your take profit. I don't know if it would have ran straight to this take profit. I don't know about all that. The way I trade, the way I was reviewing this trade, that was my take profit. This blue line right here. This right here was my take profit. But yeah, that's why if you have an SMT, it's nicer. Like obviously, look, you kind of mess up your RR. You could be having a 3, or if you were at my take profit, I would have done. You had a 2, and now you have a 1.3. But guess what's better than a 1.3 RR? No RR, right? No, fucking losing your trade is worse. So yeah, if you have your stop in there, have it a little wide, give the trade some room to breathe, because you still have the right conviction. You know what I mean? You still have the right draws. It just needs a bit of room to run and maybe retrace and take back some liquidity. Whatever the hell. I don't know why the fuck manipulate. Who knows, bro? This also is super long, like for a trade setup of mine. Like normally I would not let a trade run this long. I guess actually that's not true. Let me take that back. This was like after the 950 or 1010 macro. So I would have actually let this run. And just like left the chart alone, put my limit orders, and just put like a trading view alert or something. And then if it came up on my phone, I would have managed it. But yeah, that's also why sometimes going break even is just, I don't know. Because ideally, if this shit would load, like what the fuck is taking this so long? Dude. Nah, there we go. Because ideally, you could have break even like, I don't know, at this internal high. That's a pretty nice high. Or these to equal highs, but then you would have gotten stopped out. And look at this. I think like these next few candles. Yep. Tap straight into take profit. So yeah, that's, and you can see immediately rejecting out of that 15-minute fair value gap too, which is why I would have had my take profit there. I'm so curious to see if this is going to run up to this 5-minute or even London highs. Let's go like the 15-minute and see. I have no clue. I didn't see price this far. Dude, I don't understand. I do not have the ES chart open, bro. Please. Jeez, bro. All right. Wow, yeah, looks like okay, so it would have ramped to London. That's nice. It's very nice. But yeah, like I said, you could do that if you want. Definitely not going to help your win rate if you're targeting bigger trades like this, because bigger moves like this do not normally happen. So I don't know. That's up to you and the way you trade. But yeah, that's what I like about this model too. It's like inverse for value gaps, and like it's literally what this is liquidity sweep, internal liquidity sweep, and then inverse for value gap. So you kind of avoid that manipulation that a lot of people get stopped out on after a liquidity sweep. So yeah, this could have been like a what on one mini. This is what 2. Can I not do math? What's 100 times fucking 20? Fucking $2,000 and change. $2,180. $2,180 would be this on one mini. Yeah, pretty cool. But like I said, obviously consistency, in my opinion, is better than hitting a fucking grand slam every day. If you're gonna do it, I mean, this is perfect volatility to do it, where you chop out for whole PM session. I mean, whole AM session, and then PM comes, and I don't know what the hell this was. But yeah, that's all for today. Just showing you a trade recap, going way more in depth than I normally do. Just free sauce, and kind of higher probability inverse fair value gaps. So yeah, if you enjoy this, I don't give a shit. Catch you in the next one.